Hi guys, welcome back to my YouTube channel. If you are new to this YouTube channel, welcome, and don't forget to follow the order of the episodes that we've been posting so that you can understand this program. I call it free mentorship, or let me call it free Forex course. So make sure that you follow the program starting from the very beginning. If you don't understand, make sure that you come back to me, send me a text or comment, then I'll be able to respond to you. So welcome back to Wealth Factory Forex. So today we're going to be looking at something very easy but interesting. It's something that is going to help you guys in your journey as Forex traders. So today we're going to be looking at how you are going to be analyzing the market, but mainly we are going to look at the TradingView software. You remember we talked about the software that you have to be using as a trader for you to analyze the market, of which we have TradingView as the main Forex software we use for analyzing the market. You can also use the MetaTrader application to analyze the market, but TradingView is the perfect one to analyze the market. So today we're going to be talking about how do we use the TradingView. Because remember, this is a beginner's program. This is a beginner's course of which we started from the very beginning of what is Forex, now moving on into analyzing the market and how to use the MetaTrader application. I mean, the TradingView.com software, and we're going to move on to how to use a MetaTrader application on an iPhone and Android. I gave one of the guys who are under my mentorship to record a video on how to use a MetaTrader application on an Android. Then after that, myself, I'm going to do how to use a MetaTrader application on an iPhone. Okay, so without wasting much of your time, guys, let's get into the video, how to use the TradingView.com software for analyzing the market, and where do you find the tools to analyze the market. So remember, guys, here I'm going to be teaching you what has been working for me and what is working for me. So even the tools that we are going to be using on TradingView, we are only going to be using what I've been using myself, and that's what I expect you guys to be using. And I have to put this on record before we continue with these videos. I don't use indicators. Indicators, we don't use them here. We just do perfect technical analysis, only price action, and my strategy, no indicator needed, and we are able to kill the market like a boss. So now let's get into the video. How do we use a TradingView software? So a TradingView software, this is a software you're going to be using for analyzing the market. So you can find it on your Google, you can find it on your Chrome. You just go and search for TradingView.com. So here I'm going to use Microsoft Edge as the one I'm going to get my TradingView.com from. So I'm going to come from here. Then I'm going to type www. It has already come. .tradingview.com. Then I'm going to click there. So for me, when I come here, but if I want, I can just come here, add new tab, then there's here where there's got this icon here. The icon for TradingView looks like this. So I can just come here, then it will take me direct to my TradingView. Okay, so when you open your TradingView, you need to sign in, of which signing in is not something that is very difficult. They are going to guide you with the steps as you're going to sign in. But now, when you come here, you see how this is looking. So when you scroll down here, there's this one here for candles. So I like using candlesticks. So go on candlesticks, yes. So on candlesticks now we have the candles coming in, showing up on our trading view. All right. So let me use the one I've been using. So let's take this one. All right, so this is our trading view. Of course, it might look different from the one that you're from seeing, which had red and green. But myself, I like using black and green. These are my favorite colors when it comes to candlesticks. But that's not important. You can be using candlesticks of your own, colors of your own choice. You can decide to use all green, all black, or red, or purple, whatever, and whatnot. But what is more important is how you analyze the market. So here is how you use tradingview.com. I don't know why I keep on mentioning MetaTrader application, because maybe that's where I spend most of my time from. But yeah, here we are talking about tradingview.com. So now let's get into how do we use this software. So most important thing here that you have to know, first, you have to know where you find the instrument used for doing your analysis, and also time. So we have time and drawing as things we're going to be using for doing analysis. So where do we find time? When you look at on top here, you find something like 2 hours, 5 minutes, 15 minutes, 30 minutes, 1 hour, then we have 2 hours, 3 hours, 4 hours, day time frame, weekly time frame, 1 hour, 1 month time frame. Then you have 6 months, 3 months, 6 months. So when you come on this icon here, had put all these as my favorite, but let me remove them so that I can show you guys how to put them as your favorite, so that they can be showing on the screen, can be able to select them. So right now we have 5 minutes time frame. So what does time frame mean? Like when we say different time frame. So here we have, it starts from seconds, minutes, then hours, days, weeks, then months. So what time frame means is that it takes that particular time for one candle to be formed. So if we put our trading view in 10 minutes time frame, meaning that it takes 10 minutes for this one candle we want to see to be formed. When you put it in 1 minute time frame, meaning that you're going to take 1 minute for one candle to be completely formed. So if I say 1 hour time frame, meaning that it's going to take 1 hour for one candle to be formed. 4 hour time frame, meaning that it's going to take 4 hours for one candle to be formed. Daily, same. It takes 1 day for one candle to be formed. So here's the secret. You, as a trader who doesn't have a lot of money, someone who is like me, you don't have money, you don't have millions, you are going to be trading from small time frame. So the reason why time frame is there is to allow people with small money, different kinds of account sizes to trade in the forex market. It wasn't going to be limited to only people who are having millions. For example, if we take a look at the market from 1 year time frame, meaning that it takes 1 year for one candle to be formed, and you, as a trader who doesn't have a lot of money, if you invest or you buy something using the analysis of 1 year time frame, the possibility is that your account is going to be blown out before the market goes in your direction. It doesn't mean that you are wrong, but the account is not fit enough for the time frame you've chosen. So that's where now these small time frames comes in, so that the retail traders can come in and be able to trade within a short period of time. So let's go. Excuse me for that. Let's go. When you click there on time, find that seconds, 1 minute, and whatnot. So, for example, I'll go to one month time frame, and you're going to see something like this. So, in 1 month time frame, we have something like this. So, guys, gold right now, as you are going to be watching this video, guys, gold is going to drop like crazy. Gold is going to drop. We're going to have a massive drop on gold if this candle closes below here. Most likely that this whole year, gold is going to drop all the way up and down here. All right, so we are looking at the market from 1 year time frame. I mean 1 month time frame. So if I were to enter the market here, so I enter the market from here where it is right now at 1868. I enter there. It doesn't mean that I'm wrong, that maybe I sell or buy from there. But now let's take a look at how many pips this market is going to take for the candle to close. It's going to take a lot of time, right? So another reason why there is time frame is because people who have small amount of money can't hold trades for a long time. You can't hold a trade that is going in negative for 1 year. If you have a $5 account, it's going to be blown in 1 day in minutes. So that's where those minutes comes in. So we can describe time frame as a microscope in science. So we are trying to look at the market from different angles. We are trying to look at the market from different, how do you call those? I've forgotten what you call those things for the microscope. So you are trying to look at the market from different perspectives. We are trying to look at the market, how the market is behaving in monthly time frame, daily time frame, hourly time frame, and minutes. So that's why time frame comes in. So it helps you to look at the market from different perspectives. So most of the times you're going to use these higher time frames like monthly, daily time frame, weekly time frame to see the direction of the market. That's what we can use these for. So as we're going to be continuing in these lessons, you're going to see how I'm going to be using time to analyze the market and whatnot, okay? So time is found here and it allows people to trade the forex market even if they have small amount of money. That's what time is for. That's the main reason. There is no other greater reason than this, to trade in the forex market even if you have little money. That's it, guys. That's the main purpose of time frame. Having multiple time frame is to trade the market even if you have $5. Because if you have $5, you can trade in 1 year time frame, monthly time frame, weekly time frame, or daily time frame. Why? Because your account is not fit for the bigger time frame. That's where small time frame comes in for you and me as retail traders to fit in. Big companies, big banks like JP Morgan's are the ones that are fit to be trading in bigger time frame. Okay. Now let's move on to what we use to analyze the market, what we use for drawing. So mainly I use trend line for analyzing the market, like to draw the trend of the market. So remember, when you're drawing the trend of the market, your trend, let me say your your trend line is supposed to be touching the outermost part. Okay, so if the market is going up, your trend line, the major trend line is supposed to be down here, okay? And that's where the support or demand is found. If the market is going down, your trend line is supposed to be found up here, guys, okay? So now let's go. I'll go to daily time frame for I'll go to daily time frame for this is US 30. So I'm going to draw this trend line like this from here all the way up to here. I'm going to be touching these outermost points, which is this one here, that one there, that one there. Okay. Then when the market is going up like here, what am I going to do? I'm going to draw my trend line like this. Okay. Okay. Going to draw my trend line like that. Why? Because this one is touching this outer zone and outer zone here, and outer zone here, and this one is touching here, there, and there. Okay. So this one is an uptrend, this one is a downtrend, of which you already know. I talked about these in the previous videos, but now let's get into these tools you are seeing here. These are the ones that I use. So this trend line you've seen here, this trend line you've seen here, I get it from here. Second, from above. 1, 2. That's why you find the trend line is up here. If you want, you can put it on favorite, then it's going to come down here. Okay. If you want to point the direction of the market, where you expect the market to be going, you can use an arrow, of which this one, I usually use it, like pointing the direction of the market like this. So you just go here, click to select, then you go here, you click, then comes, drag it down or up, whichever direction you expect the market to go. This is to help you indicate the direction of the market you are expecting. Okay, so now the second one that I like using is the Fibonacci. So I like using the Fibonacci retracement. So the Fibonacci retracement is to help you get a perfect entry when the market is retracing. So retracing, we have a zone, like we have a double top or double bottom, then the neckline has been broken. So we expect the market to come back to that neckline. That comeback is called a retracement in forex trading. So Fibonacci's retracement, I like using it, guys, for getting perfect entries. So it has it has different zones, but for me, I like using the discount and the premium. The discount is where I'm looking for sell. I'm looking for sell. Let me show you guys. So here, you go here on the third one, that's where you find the Fibonacci. You go here, get the Fibonacci, you come drag it here like this. Okay, drag it here like this. So you have the discount and the premium. So the discount, that's where we buy from. Then the premium, that's where we sell from. So let's imagine that the market is going down. So this market is going down, we're going to be looking for sales. So if this zone has been broken here, we are expecting the market to retrace to a certain level. So we are only going to sell when the market comes to the premium level. But I'm not going to explain more about Fibonacci because this is something very important and is taught under mentorship. So it won't be fair for the guys who paid for mentorship if I talk about everything in this video. Okay, so let's move on to the next one. So on this Fibonacci icon, I only use one. Then we're going to move on to the very, very important icon, which is the fourth one. So here, the fourth one, that's where I get this rectangle one. The rectangle one is used for drawing. Maybe you're expecting a double top, a double bottom, and whatnot, something like this. Okay, so a rectangle, you can draw like a level, a horizontal, level where I expect the market to come and test and whatnot. Then we have the highlighter, of which I've done here, black. Then we have a brush, like you can use it for brushing and whatnot. Then we have circle, I don't use it. Then the path is to show the direction of the market as well. Yeah, so here I use mainly the rectangle, highlighter, and the path. In the polyline, of course, sometimes when I'm trying to teach something of which is not important for you guys. So let's move on to the next one, which is the next one is text. So if maybe you want to label the price of, I mean the price of the market, where you expect the market to come, the take profit, stop profit. This is where you find the text from. So you have the text, then you have image. Maybe you want to add your logo on the on the trading view. Then we have the comment, the price label, like you want to label the price, the certain level of the price. Then we have an arrow. These are bigger ones. Then we have this one here, which is first, second, fifth, third, fourth, fifth, sixth, seventh. So we have this, the number 7 one here, which is when you're indicating the direction of the market, like you want to see the risk to reward ratio. That's where you come and get this one here. It's going to be showing you the risk to reward ratio. Okay, so you see something like this. You see something like this. That's what helps you to show you risk to reward ratio. So you can see here risk to reward ratio is 12.8. So meaning that you have 1 to 12.8 risk to reward ratio. So if you are here, if you are risking $1, meaning that you are expecting to make, you are risking $1 to make $12. So that's what risk to reward ratio means. It means the money you are risking to get this reward. So you're risking $1 to get $12. Then same applies to when you are selling, because this one is for buying. So the red part mostly is for when you're going into loss. The green part is for when you're going into profit. Sorry guys, I'm very fast because I have to keep this video short and make sure that you guys are able to follow. Then we have the sell one here. Okay, this one, the short position. Sell is called short, and buy is called long in the forex market. So the short one, when you come here, you can see. Okay, so let's see, risk to reward ratio 25. So you are risking $1 selling. You sold, but you risked $1 to gain $25. That's what it means. So these are some of the most important instruments, guys, that I use in the forex market. Then I'll go to where you can find indicators in case you're going to be using indicators, in case the mentor you're going to get, because I'm not giving it to you guys as you watch these videos. You have to come to me to come and get mentorship from me. If you feel like you have to come and get mentorship from me, you're most welcome. But if you feel like you would like to get mentorship from someone else, you guys, you're free. You can go and get mentorship from those people, but make sure that people you are getting mentorship from are offering the best. Okay, so we have you have indicators here. That's where you get indicators. You just come there, then you go and search for an indicator you want here. Okay, then we have when you want to change the background and whatnot, you come on settings. Okay, when you come on settings, you have these ones here. So for symbols here, that's where you change for the candlesticks and whatnot. Appearance, that's where you change the background and whatnot. Okay, so that's what I wanted to talk about today. So for today, guys, I'm going to end here. That's what I really wanted to talk about. Most of the important things or icons you're supposed to be using in the forex market as you're analyzing it on tradingview.com software. Okay, so see you guys in the next video. Thank you so much for sticking around, and don't forget to share, like, and subscribe. If you haven't subscribed to this YouTube channel, please, guys, hit that subscription button and don't forget to turn on your notifications so that every time we post a video, you are going to get notified and watch the video without missing. Thank you so much, guys, for watching. This is the end of today's video. Bye.